Hello friends, this is Rajat and today we are talking about a very important topic on the dividends as India Inc. has changed its viewpoint on the dividend strategy that they had been adhering to right now. So what does this mean? If I may tell you that Vedanta as a company which had given around 70,000 crores of the dividend last year has slashed it by 83,000 to 11,000 crores. So your dividend income has gone down by, if I talk about the TCS which had given around 26,000 crore of the dividend this year, had actually paid around 42,000 crore of the dividend last year. So that means again there has been around a 30% fall in that. So this topic today I'm talking about, there has been a shift by India Inc. in their dividend policy, dividend payout policy, and which, what does it mean for you or your portfolio? Your dividend income has gone down. While you might be euphoric about the returns you are making in equity markets because market is going gungo high and high, but for those who have been relying on dividend income or had strategic positions on the stocks from a dividend income style of investing, stand impacted. So therefore this would be having a 2-3 segments quick 5-minute video which will show you how you need to traverse now, what are the viewpoints here and what has happened. So first and foremost, there has been a dividend payout decline of around 38% for FY24 as compared to the last year. So even if we consider buybacks done by the companies and the dividends payout being paid, it has just been around 38%, while the last year it had been around 44%. So that is one part of it. The second part means why the companies have done this, why it has happened. When the market is going good, everything is going good, macroeconomics are good, there's no bad news as such, then why this is happening, why the companies are not paying dividends. So first thing we need to understand is dividend is a money paid by the companies from their own earnings to the investors. So if they are not paying you money from their own earnings when they are making money, so where they are keeping it? Are they keeping it with themselves? No, they are not. They are actually getting that money diverted to the private investments. Now what does private investment means? This means that they are using that money for capital expansion, private investments, increasing their capacities, launching new products, projects, expanding to new territories for that matter. So what the government of India had been asking private companies for the last 1, 2 or 4 years to please go ahead with the private investments, please go and make great private investments, but they had been sitting on the back foot. Now the companies have started doing this. So what does this mean and how you can corroborate whether they're actually doing this? Because if we look at the data from the private banks, the banks have said that for the FY24 they have received private investment proposals from the corporates for which they have been given approval by the banks, obviously amounts to around 3 lakh crore, which last year had been around 2 lakh crore. So therefore from FY23 to FY24 as of now we are standing at plus 1 lakh crore additional rise of private investment proposal that have been sanctioned by the bank. So therefore if you consider over the next 6 months or a year how the dividend strategy will go, please do not expect the dividend payout ratio to increase, or you can say dividend payout percentage to increase as such. We are not looking forward to that, because if the companies have confirmed or committed their investment for the private expansion, it will go for a multi-year long period. So what does this then mean for the investor? So first thing, you need to again analyze your stock portfolio. If you are too much aligned towards the income generating portfolio for which dividend paying stocks are one kitty, so then you need to reconsider and have some all other assets also into it, like annuity products, like secondary bonds, or you can say corporate deposits with the monthly or the quarterly payouts if you are too much dependent on the income, although there will be impact on the taxation part of it, but then you will have to bite the bullet. Point number two, for those who are primarily into equity and no equity markets, can do two things. First thing, they can still strategize and research on the companies that they are holding for good dividends and see how their policy henceforth would be in terms of private placement. So that means, does their annual report or the quarterly report say that okay, we are going to make private investments of so much crores and so much thousand crores or no? If they are going with a private placement, then you can think whether there is a good opportunity for you in some other stock or this. So point number one. So point number two comes key, if you really want to have a better value of it, you can consider those stocks which you are expecting would be making a buyback, because every year they have been trying to make a buyback. So you can go for those stocks which are actually going for a buyback so that you can get a better value of it. But then again, it will have very less probability and dependency, and so therefore will have a different degree of risk altogether. And also at the end, lastly, what the best thing you could do is to connect with your financial advisor or an agent or a broker and to see what you can do in terms of your portfolio. In either case, the first step is for you to revisit your portfolio, see how the dividends are being impacted, and then see what strategy based on your particular need you need to follow. So this is Rajat signing off. Thank you so much.